Hi, thank you all for coming. I'm Greg Wallace, Senior Editor with Hotel Business Magazine. And with me today are Gray Rains, Managing Partner of Rains Company, Brad Rahinsky, President and CEO of Hotel Equities, Jay Burnett, Chief Investment Officer, GF Hotels and Resorts, and Bo Benton, President of LBA Hospitality. If you've been paying attention to hotel business or any of the other media properties out there, you know that there might have been some acquisitions in the last week or so. Obviously, Rains acquired HP, Aimbridge acquired Terrapin. I mean, we've got some mergers and acquisitions happening. What are your thoughts on seeing these types of mergers? Does anybody have an announcement on any mergers you want to announce here, breaking some news?
Brad, you got one?
Well, probably. We just did a partnership. It was good to see everybody. Thanks for coming down. We just did a partnership with a group, NHS, who we just absolutely love, and a bit different than what Greg is describing in terms of our model versus some of the others. It's not an acquisition. We didn't acquire them. It's a collective. It's a partnership, an alliance between our two organizations where we kind of bolt on our engines together and create efficiencies and scale. And so anyhow, we now have 6 of those within the Hotel Equities portfolio, and it's just been wildly successful by all accounts. Right.
Anyone else want to talk about?
We've done both really over the last 18 months of more of a strategic partnership, what Brad said. And then also the other thing we've seen is a lot of the smaller management companies that are deciding they don't want to be managers anymore after 2020. Mm-hmm. And so really to be able to have the scale that you have to have, the resources that you have to have, whether it's revenue management, social media, e-commerce, that you didn't have to have 10 years ago. And so really, I think that's why you're seeing a lot of the mergers and acquisition is really to be able to get those resources.
Sure.
And for us, I mean, as much as it was an acquisition, it was also an acquisition of contracts, but it was an acquisition of people. I mean, there's very much a human capital side of this. I mean, we're a people-oriented business. That's where we invest our time. That's where we invest our money. And to align with someone like Kerry Ranson and his entire team really meant a lot to us. I mean, it didn't happen quickly. All the decisions that my partner, David Tart, and I make are long-term decisions. They're things that we put in place to sustain for the next 20, 25 years. So what began at Hunter last year was finished last week with the acquisition. So for us, it was a people play as much as it was a geographic footprint play too.
Excellent. Maybe a little bit of the odd man out, but we're not really pursuing that, to be honest with you. We have about 130, 140 hotels right now in our portfolio. We think it's a good size. We're happy to grow. I guess you'd say we're growing a little bit more organically. I guess you could say. We're getting ready to take over a 4-pack, and just kind of chewing off pieces like that and growing our team as we need to, and our infrastructure. And never say never, but for right now, GF is not really looking to acquire or merge or have strategic partnerships in that way. So
fantastic.
Works for us.
That's great. And why do you think these mergers and acquisitions? Is it that companies didn't survive or feel like they couldn't survive the pandemic, or this was too stressful, I'm done, let me get out of this? Why are these happening?
I have an opinion.
Go ahead.
You mentioned earlier part of it, which I don't disagree with. Maybe we'll just add to what you're saying, but I do think you're seeing some second-generation companies, second-generation families who have taken over the reins of their companies, and whether that's a COVID thing or not, maybe it's just coincidental timing as well. But they grew up in the business. They grew up in operations. They've gone to graduate schools, and they become more interested in acquisitions and development and being entrepreneurs and being owners, and realize it's kind of hard to do all this. And exactly like you said, the infrastructure that's needed to be a good hotel manager. It's like, do I want to build that competence? Do I want to build the competence of being a developer and owner? And sometimes they make that choice not
I think just the limited time resources, what we've seen a lot of times with that second generation of family says, I'm spending all my time answering that phone call for the 5 o'clock pipe burst, or somebody didn't show up, or I'm having to replace a regional, all of those kind of things. And where they're really making their money is in the development side, and that's what they enjoy. And so that's what we've seen with a lot of these groups.
I would just add, and certainly agree with what Jay and Bo just said. I had a couple of things. First of all, what Gray said about the people piece, spot on. That should be the lone pole in the tent if anyone's having that conversation around a potential partnership or alliance or acquisition. The math part of it, you should be able to figure out relatively quickly. The people part is the part that you need to get in the kitchen with that potential partner and make sure that you are understanding of their culture, that there's synergy or an alignment around all the things that they prioritize, and that if you are going to get married, because it should be viewed as a marriage, that it's somebody that you want to wake up with every day, that you can pull the rope together. Regarding your second part, Greg, so what I would suggest, once again, completely agree with Jay and Bo, I would also say that we are an incredibly fragmented industry, nearly 500 management companies throughout our space, and that fragmentation creates inefficiencies. It's just a reality. Scale matters, it always mattered, but it never mattered more than when COVID came and sucker punched us all in the mouth and created either an opportunity or a real situation. And for everybody, initially it was a real situation. But then a few of us got in a room and you try to figure out, how am I going to survive this? What can I do to punch my way out of it? And scale. So some of the things, we talk about the people part of it, making sure that you're aligned with that, but also some of the things that are just static on your P&L, but a big part of your business, whether it's insurance or IT or the labor model, procurement, all those things, scale really matters. So the ability to go from 10 hotels to 100 hotels to 300 hotels, and the scale that comes along with that, the efficiencies that come along with that, the savings, in some cases instant and significant, are material. They're material to an owner, a developer, an operator, everyone that we work for and with. And the last part of that is that while you have that scale, the real goal, the real magic behind that is, how do you stay intimate? As you've gone from 50 to 100 to 300, how do you stay intimate and make sure that you're still got your fingers on the pulse with your owner community, with your associate community, with your guest community? And that's the key. If you can figure that out and do that well with authenticity, then it doesn't matter whether you're 300 or 3,000. The key is staying intimate as you grow and scale.
The scale piece is huge for us. I mean, we saw that instantly. So for us, it's, we don't have pressure to grow. We want to grow when it's smart. We're a privately held company, so I mean, there's no one saying grow, grow, grow. You have to do that. But when the opportunity came, the scale is absolutely important. The geographic growth, and then also the opportunity for our people. It created better opportunities for our people, gives them the ability to move very quickly into other areas, to where that retention piece is important now. And hey, I'm moving to Texas or I'm moving to Florida. We have an opportunity for them now where we would have lost them historically.
Right, and it's a good segue for me, because my next question is something that we could probably sit here for 3 hours and talk about. It's labor. So I imagine that when you do have that scale, it provides opportunities for your employees, because they know that reaching the GM of this hotel isn't where they're going to stop. They can move to a different city. They have opportunities other places. With the labor situation, actually for everyone here, this is major information. What's the solution?
For us, it's investing. It's investing back in our people. I mean, we're spending more time on our culture, on our people. I mean, retention's absolutely critical. I mean, I think that the value of hanging on to someone is far more important than going and finding someone new. So for us, I mean, we've invested more dollars back into both of those areas, really more than we ever have since COVID. I mean, COVID depleted our farm team, right? I mean, our AGMs, our front office managers that were always going to be our next GMs, we're rebuilding that now.
Agree. I would add that certainly no silver bullet to the labor piece. The war on talent continues, and there's a couple things that are table stakes at this point. If your comp is not at market par, you're just never going to get there. You're always going to be looking, or you're going to have to hire outside labor. So the comp is table stakes. It's got to be there. There was a day where we were getting away with some stuff, particularly at the line level. We got exposed with Walmart, with Amazon, with Uber, with DoorDash, and here we go. And so now we are at par, and you have to be. Table stakes. I would say that Gray just mentioned the culture piece, very catchy and buzzy right now. It's either authentic and you've had it and it's embedded in the fiber of your organization, or it's trendy, and at some point you'll be exposed that it's just not a really important part of your organization. It's just a catchphrase. That culture piece is real. You can monetize that, because if it's real and authentic, your retention will be better, your attrition will be lower, and that shows up on your P&Ls and your income statements. Not often, but always. And we can show that. Empirical data will support suggests that. So that piece is just mission critical too. And to Gray's point, creating a roadmap, an aspirational roadmap, so that when you have a housekeeper, a front desk agent, a front office manager, and they have aspirations and they've suggested to you that they want to stay in the business, but they want to be able to see that they have purpose and that there is some path forward for them, it is imperative and incumbent upon you as a leader to create that roadmap for that individual, or you will lose them. So we have countless stories, great stories of housekeepers becoming GMs and GMs becoming VPs and VPs becoming C-suite. And that's what it's all about. It's not how many times you cross the finish line, it's how many people you bring with you. And if you're not doing that, somebody else will, whether it's in our space or not, and you will always be in that hamster wheel of looking for talent and labor. The churn.
You know, we had a cool experience Monday afternoon. We came down early for the conference. We went to one of our hotels we manage, and we sat down with 4 of our leaders, and just talking to them. And a couple things occurred to me there. First of all, I think showing them that linkage to something bigger than just that hotel, because they kill themselves every day at that property, and they had a chance to just talk to them about our culture. And they sat with the president of our division. They sat with the chief investment officer. They sat with the EVP of sales to see that there's a bigger something out there that they can aspire to, and it's like the program that you can offer to them. And we walked out of that meeting with the particular individual in that meeting, and we're like on the phone preparing to get them involved with a management training that we have to go to the next thing. We have an executive housekeeper at that property that opened the property in 2005. And has been there all that time. And she was telling us the last time she had to hire someone in her department was over a year ago. We're like, well, that's amazing. How is that possible? How have you done that? And she said, you have to make it like a family. And so, you can pay lip service to that, but somehow she's done it, and we've been able to support that for her. And I'll say one other thing about staffing is, I was watching one of the news shows, I don't know if it was CNBC or something, talking about the latest jobs report. And the comment was, X jobs were created over the last quarter or month or whatever it was, but 50% of those are hospitality jobs. Those are like, turn your nose up at these crappy hospitality jobs. And it really annoyed me, and it got me thinking, the leaders at that table that we were meeting with, they all started with low-wage hospitality jobs. Right. But one of them, within less than a year, had been promoted, so excited and happy about the opportunity. And I think we need to be able to defend our industry and pay well and have good programs and good wages. But look, you got to start somewhere. And get people in there that are proud of what they do and can get a lot of support and can grow in their jobs. And we should be proud of what we offer and the number of jobs that are created. I think it's incredible that 50% of the jobs that got created in a certain time were hospitality jobs. Absolutely. That's the future of our industry. So we got to have good language around that and be a little bit defensive about what we're doing here and the opportunities that we gave people. Most people on this stage and in this room probably started at one of those. I started behind the front desk at a Hampton Inn. It's like most of us probably did that. So
exactly, Bo.
Yeah, just to piggyback on kind of what Brad and Gray were saying, you can't recruit yourself out of this. You got to spend the probably more time, effort, and money in retention, training, and painting that picture of what can you do in this company. I was telling a GM candidate the other day, I said, one of the things I love in this industry is nobody ever says, where did you go to school? What's your, because it doesn't matter. Exactly. You can start at the front desk. You can start in housekeeping. We've got regional directors of operations that started as a contract cleaner on a construction site for a hotel for us. And we do a poor job as an industry probably of showing what that roadmap looks like. But you've got to grow your people, not just be out there as a headhunter trying to fill positions.
Sure. Do you all have formal programs, or is it more an informal kind of thing to bring those employees who are, just starting out or in quote unquote lower positions, to bring them to more corporate C-level kind of things?
We have a formal program that allows folks to start housekeeping, front desk, wherever that is, and they can see a path forward, they can see a career. I mean, pretty much our entire executive team started at property level at some point and have moved up internally.
Right.
And I think that's something we do well. I mean, we move up internally as well as anybody.
I would suggest to you, Greg, that if you don't have an intentional internal program or programs, you shouldn't be in the operations side of our business at this point. We have multiple that dovetail one another. That you heard me talk about that roadmap. So we have 6 different programs that start off at the line level all the way up to senior multi-unit leadership, and just allows somebody to progress their path forward. Now they have to live up to their end of the bargain, and there's some folks in here that have gone through some of those programs. We have an MIT program. We're now affiliated with 26 different colleges and universities around the country to tap into that talent. I say colleges, but it's also tech schools and high schools. That's an important piece of our bench program as well.
Exactly.
But those programs are, you heard me talk about table stakes, there is essential to, because Bo nailed it, you can't recruit your way out of this. If you are not creating your bench, if you don't have your farm team ready to go for the next 4-pack of hotels or 40 hotels, you're dead in the water. You will impede, you will inhibit your growth.
Exactly. JD?
Formal process. People either asked to be into it and show that effort, or some people are identified and invited, to be on a certain pathway. But people know they're on that path. They know where they stand on that path, and we try to be goal oriented with that. So I don't have much more to add other than that.
Yeah. And ours starts with the orientation process. I mean, it's part of that interwoven culture of telling. We're kind of a storytelling company, I think, in how we do a lot of things, and telling that story of these people, and hey, this person, this is where they started, and tell that culture piece. I think it's got to be intentional. You can't just hope that it happens. And I think too, generationally, if you study the millennials and understand, they've got to have that feedback. They're not like a lot of us were, and you just put your head down and you worked and you hope you heard from somebody at your annual review. That doesn't work anymore. So I think if you're not intentional and give them that roadmap and give them continual feedback on it, you're going to lose those people.
Exactly. And, culture is extremely important. You see that a lot of times where an employee will leave a company and within 6 months they come back because they don't realize what they lost and what they had. So I think, establishing that culture so that, and you saw that a lot with the pandemic because you had salespeople making beds. They cared about the guests, they cared about their company and keeping that company going, and it wasn't like, I'm going to work to earn a paycheck. That culture is very important. Speaking of the pandemic, I mean, and the way the workers are now, what kind of changes did you make to accommodate your employees and those millennials and Generation Z that are coming up? I mean, you mentioned DoorDash and Uber and things where they have that gig kind of economy. Are you offering more flexible scheduling to your employees?
Absolutely. I mean, quality of life's critical. And I think that's something as an industry, right? I mean, we have people that are leaving our industry, and we've got to work harder to show a path, but to keep them inside hospitality. I mean, we don't want folks leaving because there were a lot of things that happened in COVID. We all did what we could to survive, but we've got to change that narrative now. I mean, quality of life is critical for what they face. So, I mean, it's, flexibility. I mean, the gig side of things, it's really tough to implement gig work and keep your culture. There's been some of that's been tested, but it's not really ideal for us. But yeah, I mean, the millennial side of things, I mean, the gig piece is going to be part of the conversation for a while.
Yeah, as an industry, we were incredibly prescribed. I suggest archaic, and you're 7 to 3, 3 to 11, 11 to 7, and here's here's your 2 week and go get them.
It's
So look, it put us on our heels, and if we were once again going to be able to do battle in this war on talent, it would require you to have a paradigm shift in the way that you were looking at your business, both at the unit level and above property level. At the unit level and above property level, we've done things that if you would have told me 4 years ago, here's what your model's going to look like, I would have lost money on that. We pay every day if you want to get paid every day. We have a sabbatical program. You work with us for 5 years. You get a 6 weeks full paid sabbatical. You can't take your laptop or your phone with you. We have flex scheduling following that gig economy because we had to. And now that we've had to, and we've been doing it now for about almost 2 years, not only have we gotten comfortable with it, we can't believe that we weren't applying it to some degree prior to COVID, because it ended up, once you get your arms around it, it's just a better model. It allows you to flex in a way from a labor standpoint that you couldn't if you were just following that static historical model. So yeah, it's forced us all to look at things a bit differently. Initially, and to some degree, a bit uncomfortably, but ultimately, it's made us better.
Right.
Yeah, I think our biggest shift, I would say, in the supporting roles, the above property roles. You know, when COVID came, a lot of that was forced to be remote, and that kind of stuck on a lot of that, which is a big cultural shift for our company. You know, I'm an example. I'm home based up in Greenville. Our company's based in Philadelphia. So what you have to be careful with there is you have to have the systems and the technology that support that. You also have to hire a little differently, and you got to make sure that you're hiring, you know, culturally and personality-wise and work ethic-wise and whatever it might be, that someone can be just as productive. You know, at the property level, the only other thing I would add to that is, you know, the term of the gig economy I don't think works too well. For us, and you know, we resort to, or we utilize contract labor sometimes we have to. Don't prefer that, frankly, you know, because you're not inculcating a culture on people that don't work for you. And so, you know, the more we can do to have the right programs and recruit well and pay well and be like a family and hire and have a full staff of people that work for us is preferable. It's an ongoing process to do that, though.
Right.
Yeah.
So?
I think the daily pay gives you kind of that feel of the gig economy. I do something, I get a reward. I think our flexibility in our incentive plans. You know, we've always incented all the way down to the line level, but it was, you know, quarterly bonus that they probably didn't understand how it was calculated. They just got an extra check.
Yeah.
You know, now it's, hey, if everybody will show up on a Saturday, they get an extra $100. You know, those kind of, you know, perfect attendance, those kind of things where you find out really what drives the action that you want and be willing to put your money there.
Sure. And have you changed those schedules so someone is not working an 8-hour shift where they're working maybe 3 hours in the morning, they're home for their kids to have lunch or to be picked up from school, and then they're working another 3 or 4 hours here and there? Is that something that you've made that change?
Yeah, I mean, we've had to accommodate all types of schedules. So,
right.
Yeah, I don't know that there's really anything, it's property by property and market by market. But yeah, we absolutely have flexibility within our schedules to be able to recruit across the line.
Gotcha. And you know, a number of brands are now introducing digital tipping. So, I don't always carry cash, and I'll be at stay in a hotel, and I'll realize, oh, I don't have the money to leave. I wish I could just, you know, Venmo someone. Is that something that you've looked at yourselves for maybe as an incentive also to keep your employees?
We've had good luck. We're continually testing. We've tested a couple of the different platforms, but certain markets seem to do better than others. But I think two things it does is it puts it front of mind for the guest.
Right.
And it allows another, hey, I know Judy's cleaning my room now, and it gives another reason for that housekeeper to go the extra mile, and so we've seen good results with it.
I agree. Same here. We've seen more success in our soft branded and luxury product.
Yeah. More
so than our upper upscale products like service. But
our leisure markets, some of our like cruise type markets, we've seen really results.
Greg, we've been, there's been behavior modification around that. We've been programmed. You can't go to Starbucks or Smoothie King without, they flip the screen around. If you're not tipping, you almost feel,
Exactly.
oh boy, what are
Peer
they?
pressure.
So yeah, I'm gonna tip you for making my smoothie. I
I'll give you my
appreciate it.
Venmo if anybody wants to tip me for.
It's another example of our industry being behind the curve in terms of how we go at challenges and issues. And frankly, the brands are behind on this. And while there's all kinds of complexity around getting this thing buttoned up and getting it going for our line level associates so that we can once again compete with the folks that we talked about a few minutes ago, if we don't get that going as an industry and make that part of, and start to have behavior modification with our guests that are staying with us so that they know that that housekeeper who we're paying X is now relying to some degree on getting Y every week in that tip, we'll lose that person. So we need to wake up there. We need to accelerate the way that we're starting to implement those that technology into the user experience, because it's throughout industry. It's once again Starbucks, Smoothie King, or wherever you might go. We need to get moving there. That needs to become part of our protocol.
Sure. Jay, did you want to?
I'm not personally working on that piece of our business, so I'm not going to pretend to know something I don't know.
Okay.
I'll leave it at that
Gotcha.
with these guys that are working on it.
And for any of us who've been on a cruise, a lot of times you have the option to prepay your gratuities. Is that something that maybe the hotel industry might adopt so that when I'm at the front desk checking in or I'm checking in digitally, that I can, there's a button I can say add $3 a day or whatever it might be to make it even easier for guests? Is that something that you see as a possibility?
I like it more on the back end from a behavior modification. If it's built into the front end, it becomes part of the rate. I don't think the reward for behavior is there as much.
Gotcha. I agree with Bo. I don't want to tip my server before my meal's done. Something about that feels a bit out of sequence or out of cadence. That being said, at this point, all of the above. Let's get moving on it. If that's an easier solution from a technology standpoint to implement than the other part because of municipality issues or who owns the association, whatever the case may be, something's got to give. We got to get moving on that. Let's start. Perfect is the enemy of great. Let's get it going. If that's how we can get this thing going across the industry, let's do it. Sure.
And we talked about digital tipping. One of the silver linings that I've heard, hospitality has a reputation for being behind the times on technology, and that silver lining was it forced hospitality to do things like your digital check-in and digital room key and things like that. Are you seeing more technology on your properties now being instituted, or is there anything maybe you instituted that you thought, I didn't expect this so quickly, or I didn't expect it at all?
I think, you mentioned digital key. I love digital key as the guest. I don't necessarily love it as the operator.
Right.
It's rife with areas of abuse. We have mom and dad, give their honors out to their kid who goes and checks in Panama City Beach, and 20 people in a room. So there's areas with anything you do with technology, there can be trouble. But I do love some of the technology of the digital text, the automated, the artificial intelligence type stuff that allows you to communicate. In today's world, I don't like to be on the phone, but I'm a lot more likely to text somebody at the front desk through one of the platforms and say, hey, I need another towel, I need a hairdryer, whatever it may be, that you're more willing to do that. So I think it allows our people to focus on the person in front of them rather than picking up, to me it's so aggravating to be standing in front of somebody and they go, hold on just a second, let me take. So I'm less important than the person that's only picking up a phone. So I think any way we can communicate is a good system.
I would say similar to what we talked about with people, that if you're not investing and intentional about it, you're out of the game. Same with technology. If you are not investing heavily into it, and here's why. So everything that we do from a tech standpoint, we reverse engineer the process. We start with what does this do, or what does this give back to our property level folks and above property level folks. If I can get my GMs an extra 3 hours a week back, because instead of having to manually put in a report, or because this system doesn't talk to this system, but I have a bridge, I can acquire, invest in some technology, create the bridge, and I just bought them 3 hours to go either pump fists in the lobby and meet their guests, to walk rooms with their exec housekeeper, or to be home with their family. That's a win. So it's all, nothing is in a vacuum. It all has to be looking through a holistic lens to say the technology that I'm implementing, does it make me better? Does it create the ability for me to give my folks time back to what the core business is, taking care of our guests? And does it allow us to take share? Can we be more profitable? Is it an investment into the profitability of the entity? If those three things can be met, you got to do it.
Right.
I might be, I don't know if I'm a Luddite or something like that, or I'm not anti-tech, but I have a little bit of I've always been a little bit queasy on the idea of the digital check-in and the digital key, because it's something that gets in between our interaction with our guests and makes us sort of inches towards a commodity type of thing. Because part of the hospitality experience is being hospitable to your guests and helping them and getting them checked in. So that's just my personal view on the digital key. It's here, it's not going anywhere, I don't think. It is what it is. But I'll tell you something I've experienced lately is more and more, if I'm going to a resort or a conference or something, I'm getting an email in advance from a concierge, from someone at the hotel. Mr. Burnett, we're looking forward to having you. What can I do to prepare for you, or what do you need? That might be a bot. I have no idea. It may not be a real person, but the bots are pretty good these days. And so even if it is a bot, it feels like a personal contact. And that's something that, even though it's could be mechanized or it's digital and it's some kind of technology being implemented, it actually, I think it increases the interaction and the contact in a way that's not getting in the way when you're there or when you're face-to-face and you're checking in, but it gives you a chance to create that relationship in advance and have a chance to prepare for that guest and feel like, well, I'm really going to get some personal need taken care of. Even if I say, no, I don't need anything, at least I feel like there's that effort that's been made.
Exactly.
So someone that knows more about it might say, Jay, that's Chat GPT, and you don't even know that there's nobody there, but I don't know.
Bo and I are going to Google Luddite after this.
I'm glad I wasn't the only one that had no idea what that was. But no, my
wife means you're afraid of technology.
Got it.
Okay, there you go.
A quick story: my wife was staying at a small boutique hotel, and their platform was called Ivy, that was the chat bot.
Right.
And my wife, finally, about the second day there, she said, "This girl Ivy works all the time." she would text for something. She'd get back, "Hey, Miss Benton, this is Ivy." Da da da. And she thought it was just great. This poor girl was working 24 hours a day.
Well, when I checked in here, I got a text from Joy, and right above that text was the text that I had last year from Joy. I'm like, wow,
good
retention,
yeah.
exactly,
Yeah.
exactly. And those kind of texts are also probably revenue generators, because someone, before they get to your hotel, maybe they'll get a text saying, do you want to book a spa treatment or something like that? Is that something that any of you are looking into?
Absolutely. Especially more at our resort properties. I mean, getting that tea time, getting that spa appointment booked ahead of time, it allows easier staffing, and it allows an upsell from the get-go.
That's great. So switching gears a little bit, part of the title of this session is Managing Through Uncertainty. Coming into 2023, there was a lot of uncertainty as to what travel would look like, what inflation, things like that. Obviously, there's still a lot of uncertainty. Last week, we're waiting for on the Fed, the interest rates and everything. But how do you think travel is faring? Are we as easily affected, perhaps, as other industries? Are we in good shape? What are your thoughts?
I mean, you hear the noise, but I don't see it in my numbers. I'm a CPA by education, and I go back at the end of the day and I look at the numbers, and I'm like, I look at my pace, I look at my booking patterns, I look at my stay patterns, and we've been lucky. We've seen a little bit of a pullback in some of the leisure. But it's being offset completely by, that Tuesday, Wednesday night travel. And I saw a colleague made a comment I saw in one of the trades recently, talking about the flexible work week really putting more demand into that Tuesday, Wednesday, because most people are working from home, or many people working from home Monday, Friday. So it's allowing us to use that pricing dynamic and be able to really push rates. And we've seen that with our revenue management on those Tuesday, Wednesdays, where we were living off of leisure there coming out of the pandemic. Now we've been able to grow that business travel back, and our future looks bright. You know, there could be a black swan when we walk out of here that changes all that. But right now, the noise is not affecting our business.
We would echo Bo's comments. A couple of things, though. One, I would suggest that there will be a point where discretionary income is going to be impacted to the point where you will see a significant pullback in leisure. It's been done largely on the back of the feds, pushed out too much money into the economy, and free money basically for years, and we're now paying the piper. You had, in a 1-year period, you went from money being free, lowest interest rates on record, to the highest interest rates in 40 years. That happened in 12 months. So that doesn't happen without a whole bunch of consequences, and we're living those consequences now. Just go grab some eggs at Publix. So there will be a point where we pay the piper, and that leisure traveler, it's dried up. Their credit cards will be tapped out. Whatever the money they put in through PPP or whatever else is now no longer there, and we'll see that, we'll feel that. The other side of that is and Bo's exactly right, the revenues are as good as they've ever been. We've exceeded 19's revenues, and all the pundits and protagonists and smart folks said that we'd get back as an industry either in late 23 or 24. Well, we came roaring back. This industry is incredibly resilient, and it showed itself once again. We seem to do that every time there's this type of an event, or some idiot flies a plane into a building, or the GFC, or most recently the pandemic. Boy, do we pull ourselves up by our own bootstraps, get in the kitchen and get going. It's incredibly impressive to see how quickly we've punched back and got back. However, the profitability isn't where it was in 19 unless you do some of the things we were talking about earlier, particularly around scale. So while your revenues are exceeding 19's projections, or where they landed in 19, you have wage inflation, obviously, that has jumped up 30, 40, in some markets 50 and 60% from where it was in 19, particularly at the hourly level. And you got to be able to counterpunch that to be able to get those same margins, whether it's in select serve or full serve. The way that we've done that to date is through rate. We've had an incredible rate run, and I hope that that continues. And if you're hoteliers and developers, if you hear nothing else before you leave this room, please keep on pushing your rates. It is the only way that we can counterpunch against the wage creep and the procurement inflation that we're seeing, have been seeing, and will continue to see for the foreseeable future. So all those things.
Without a doubt, push rate, without a doubt. But we'd echo the same thing midweek. We're also pacing way ahead on group.
Yeah.
You know, a lot of group.
Same.
And on the books for a while too, so it's good to see.
Sure.
Yeah.
So we'll play a little game now. Let's suppose there's an investor in this audience here, and they're on the fence about getting involved in hotels, investing their money in hotels. Other than choosing your management company, what advice would you give them on, on becoming a hotel developer or investor?
I mean, I always go back to basics, and I'll play off what you just said. This is a cyclical business, and there are markets that never saw better numbers than during COVID. There are some that never saw worse numbers than during COVID, but there's always ups and there's always downs. And so, what I try to think is the basics are good location, good product. People have different opinions on brands, but think about how the brand's going to help you in a certain way. Run it well, and then when that downturn does come, in that localized issue that you have that could be different in Orlando than it is in Detroit, whatever it is, you're still going to be positioned to weather that. There's a trap to get into hotels that may be third, fourth, fifth, sixth in their comp set because, oh man, the business is just so good and it's cheap and I can get into this property. But when that downturn comes, that's going to be a problem for you. So the basics are critically important. And then the other thing I would say is, like, right now what we're seeing is the groups that are getting hotels done and hotel acquisitions done, they're borrowing money with recourse from local banks. And it's just, we're tracking that every single day because we're trying to figure out where is our strategy going to be between JVs and investments. So, just think about what your own personal risk level is going to be. And if you're at that point, you're trying to grow a platform and you're ready to take some risk and it's a great time to be able to borrow money that some people just aren't willing to borrow because they don't want to pay recourse. And there's some sellers out there that are ready to cash out, and it could be a good opportunity to buy for those people.
I'd add two things to Jay's. One, make sure you get in the right basis. You're starting off over leveraged. You just every day you're just waking up with the first X flying out the window, and it's just a tough way to wake up every day. Get in at the right basis. Next thing I'll say, you cannot overstate all the things Jay said in terms of good location, good market, good feeder markets, pushing business, creating demand for you, the right brand. If you need to have a brand on the building, the right flag flying on the building. As important or more important is go out and get the best GM and get the best director of sales, pay them what they're worth, give them the resources they need, and get out of their way. I will take your lunch if I have a hotel and I'm coming into your market if I have a better GM and DOS than you. So if you're an owner and you're not doing that, I would challenge you to make sure that you look at who your leadership is at the unit level and make sure that you got the best in the market. That just can't be overstated.
And I think two things. Number one, you're not just making a real estate investment, you're buying an operating business, and you need to understand that. And if you're talking a branded asset, you need to understand the long-term cost of that asset as well. And that kind of goes to what Jay was saying about the good times and the bad. We're cyclical. So you can't suck all the money out of the machine during the good times because the bad times are coming, renovation's coming. So you've got to plan for the long haul with it.
I'd echo all of that, as well as the brands within the brand. I mean, it's important. I mean, when there are only 5 or 6 brands at any of these companies, some of them you'd grab. It was a golden ticket for that market. That's not the same anymore. So do your research, make sure it's the right brand for the right market.
Great. So we are pretty much out of time. I wanted to thank you all for joining me up there on
Absolutely.
stage.
Thank you.
I wanted to thank all of you
Thank
for
you.
joining us.
Yep, absolutely.
Thank you.
All right.